Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We have a big week. It's a short week. Remember, today being Tuesday, stock market was closed yesterday on Monday for the Labor Day holiday weekend. But crypto was open, many commodities were open, and there was some action to talk about. But the kicker is this. Everyone now is looking forward to that jobs report on Friday. Expectations are for about 160,000 jobs created, last I checked. So we're looking for a number in that range. And again, does it come in weak, meaning the Fed is going to be pushed to cut more, or is it going to come in stronger? We'll find out Friday morning at 8:30 a.m. Eastern Time. Other than that, we don't have a lot of earnings this week. Broadcom reports later this week. That's going to be a big one for the AI trade. But aside from that, it's mostly over until next month when we'll start getting into earnings season again. Now, we did have some movers this morning. Boeing is taking a beating this morning. NVIDIA is even down a few dollars. We're going to take a look at that chart. But let's first start by getting into the market action here. This is the SPY pre-market, or the S&P 500. Now, what we can see here very, very clearly is that Friday was that general float up, right? This is the Friday action here. We floated up. The market does that going into holiday weekends. Why? Well, because you have some short covering, and really it's just very, very light volume, and that tends to favor the upside. So always remember, if the volume is light around holidays in general, it favors the upside. Now, we closed right up here on Friday. Friday after hours was sideways. 4 in the morning, we started out right here. This is 4 a.m. Eastern time, right? ET time. And then what we saw was a pretty heavy sell-off, and the market's chopping sideways here. So we have given back some of those gains from Friday. But what's interesting here is if you look at this low pivot to this high pivot, it's really not that big of a sell-off, right? I mean, we're basically negating about half of what the move was on Friday, and that's to be expected, right? You had this kind of arbitrary light volume move up, and then again, it's giving it back today just a little bit. Now, I have some bigger things to talk about today. I was doing a lot of analysis over the long weekend, and I looked at charts, and I even used logarithmic charts. Now, logarithmic charts take into account percentages versus price, right? So regular charts are all about price. Logarithmic looks more into the percentage change. Now, one of the things I found here, guys, and this is some pretty remarkable stuff, is if you look at the Dow Jones Industrial Average, and you go back 125 years, there is a trend line that, and this is the, by the way, just to side note this is the stuff that keeps me up at night. When I find charts like this is the stuff that makes me say, oh my goodness, are we near a major corrective move in the market that could maybe not just 10 or 20%, but could be 50 or 60%. And what we see here is that if you look at this, you go back to 1899, right here, right? So you had an 1899 high pivot on the Dow Jones Industrial Average. You then had basically the Roaring 20s, and just before the Great Depression, this was the Roaring 20 high before the stock market crashed in 29. We then go all the way over here. This is the .com high right here. This is the pre-COVID or just post-COVID high right there in 2021. And we're right up into it again in 2024 right here, right? So essentially what we're seeing is this logarithmic trend line that perfectly aligns with all of these major points on the chart going back 125 years. Now, for me, there's no, right, you have to always understand is there's no 100% in trading or investing, right? This could mean nothing. It could. But in general probability, based on the fact that so many major highs, I mean, here you had, I think this was a 40% correction. This was something like a 85% correction. I mean, you look at these type of pullbacks in the market, and they all come off of this trend line. And so for me, I say to myself, man, you know, not only is this telling us that there might be some sort of recessionary move, but when you see a line like this on the logarithmic scale, it does make me think that we're due for a much bigger corrective move. All right, let's go to one other. I have one more I want to show you guys. We're going to look at the NASDAQ chart. All right, now the NASDAQ chart, this is one I published on Verified Investing, so you can always go view it there afterwards if you want on the homepage in the data center. But take a look at this. This is, again, using the logarithmic view on the chart. And if we look back, we can see that if you take the dot-com high right here and you extend it out, the 2021 high goes right there, and we just kissed the 2024 high. Now, what's remarkable about that is then if we look at the lows also align. And we have the financial crisis low right here. We have the COVID low went down there, and the bear market of 2022 right to that line. Now, in terms of charting, number one, these are major points, right? I mean, this isn't just arbitrary lines connecting. This is the dot-com high, the financial crisis low, the 2021 high, the COVID low, right? I mean, these are major, major points of contention. But more than anything, it's the pattern that makes me nervous. And why does this make me nervous? Well, this is what we call a wedge pattern. Now, it's a bearish wedge pattern. And again, the idea here is that when you get a wedge pattern that's sloping up like this, in general, you'll go like this, and we see this in lots of charts, but there's a tendency for that pattern to break to the downside. Now, why is that a problem? Well, if you have this, right, where you have a financial crisis low, COVID low, bear market low of 2022, if price comes down here and breaks, where is the next major support line, right? I mean, how you're breaking a financial crisis starting point trend line here to the downside. Where do you go? Do you go back to the bear market lows of 2022, which is, 10,000, 11,000, which would be a huge corrective move on the NASDAQ, which sits in the 19,000 range at this point, right? Or do we continue down even further to the COVID lows? Or, even worst case, do we go back to, let's say, the dot-com highs? And that would kind of be my worst case scenario, is that you could do a retrace to the scene of the crime. Let me get rid of some of these lines. And so the idea here is that you take this line, and I'm not going to draw it perfectly straight, but you guys get the gist, is that in general you would head back into this range. Now, if that happens, things get really, really messy, right? I mean, that would be a horrendous type. I wouldn't even want to know what the U.S. economy looks like if that were to happen. All right, obviously all speculation, but it's important for us to look at charts. I always say this to you guys, and I say it in almost all my videos, is that my job here is to look at all probabilities, all possibilities, all probabilities. And what we have to know is that if you see something where you have major corrective moves off of a trend line, does it tell us that we're more likely or less likely to have a corrective move, even just down here to 15 or 14,000, right? I mean, maybe it only goes down there, but still, from the current levels, that would be a huge corrective move. Even the corrective move we saw just in early August only took us back to the midpoint right here, not even down to that point. So again, who knows if we break this or when we break it, but in the very least, it makes a lot of sense. You hit here, you pull back to this level. You hit the dot-com high, you came all the way down here. I mean, you obviously came down to the dot-com low too, but it makes sense that we could have some sort of pullback there. All right, so again, just wanted to kind of do a little bit of a Tuesday post-holiday, reality check. We'll call it a reality check, and the idea being is that I get the sense that a lot of people assume the markets will always go up, that there'll never be any sort of prolonged recessionary period again. And I think we have to be honest with ourselves and say, listen, the Fed has been able to artificially push the markets up. I look at it like a drug dealer, right? So you have the Federal Reserve and the U.S. government, which just flood and pump this, with a needle. They're injecting all this liquidity into the system via debt, via financial assistance by the Federal Reserve. At some point, the patient overdoses, right? And you have the worst case scenario where they flatline. And I think that's what I'm worried about more than anything is markets in general, and this is a good lesson, is that a normal market where no one interferes will have recessions, right? But it's much more of a rolling hill recession. This is a normalized situation, right? Where, you have your expansions, you have your contractions, and it's much more like a gentle, tide coming in and tide coming out. What happens is the Fed gets involved, the government doesn't have any spending restrictions, and they just spend, and you get prolonged move up, which means that you have all these interim recessions that should have occurred, but they don't because of the injection of all this liquidity and money into the system, all this debt, right? And then what happens is that when you get to a breaking point, it all falls apart. And so recessions become much more dramatic to the downside because of that, right? So you get these kind of cliff dives versus gentle rolling when you don't have intervention, and the economy goes at its normal kind of expansionary, contractionary period, right? And in all fairness, you could say that that happened. Believe it or not, going back to the Dow chart, we're not going to look at that, but in the 1920s, you had a lot of the same things. There was credit that was being given out and flooded into the system. We had a lot of money that was being pushed into the system to stimulate it post-World War I. There were so many things that were being done in terms of just being able to leverage that's very similar. What did it cause? It caused the Roaring 20s. Right? Well, the Roaring 20s, what happened? Well, you had the cliff dive, right? Now, that was an extreme situation, but you could argue we're in that same situation now of this crazy, just nonstop expansion, and then you get the cliff dive to the downside. All right, guys, enough of that for now. That's our little sermon on the morning session here. What I do want to do is just quickly go into a couple stocks that are making movement. What we have here, this is Boeing. Boeing is down pre-market. I believe it got a downgrade. There's some real questions about, how the company is going to really get out of the fiasco that they've made for themselves, which is just a lack of trust where people and companies aren't willing to buy their planes quite as readily. Plus, if you're getting into an economic slowdown, we know that the amount of planes being ordered could start to slow down as well. Either way, what we have here is Boeing closed right here on Friday at around 173 and change, and now it's coming back in here. It's trading at around 166 to 167. In terms of the daily chart, if we flip over to the daily chart here and we zoom out, you can see that it's really been just hovering here. In fact, I have this longer pattern, wedge pattern, that we can take a look at. And what this tells me is that we likely need to flush down here, right? So it's likely needs to go back and test. You can see once we hit this, down moved to the bottom. Then we went up to the top. We came down here. We probably have to go down to the bottom. So you're looking at downside where I'd start to get interested around the 140 level, which again is a perfect trend line from the 2020 low, COVID low, to this low here in 2022, this low here in late 2022, and then if we hit that again, you would expect a technical bounce. So good swing trade level potentially at 140 on Boeing. It's still a ways away, obviously, but we'll see if we get down there. Now, NVIDIA is weaker today. In all fairness, it's not, it's just pulling back from the craziness what we saw last week. But the stock, again, closing on Friday, looks like it closed around 119 and change. Looks like it's down almost $3 here pre-market. Nothing to do here. I still believe that NVIDIA, its best days are behind it. I don't mean technology-wise. I mean stock performance-wise, right? And so there is a difference. AI is here to stay, and they're going to continue to make more and more innovations. Let's be fair. Cisco Systems had an incredible move in 99-2000 because of the dot-com bubble and all the excitement around the networking of the internet. And they've still made amazing advancements in technology since 2000, right? But the stock has never gone back to those previous highs. Part of that was margins, right? Margins, there were too many competitors getting into the race, building out the networking of the internet, and ultimately things went the way they did, and the stock again has languished. My fear is that NVIDIA is now in that same situation. It's in the very early stages, but it's still in that same situation. One thing we can see very clearly here is that you have this area right through here, here, and right here, and then this rejected price. And again, we are trading down a little bit pre-market. My guess is we're headed down to $100 again based on this longer-term trend line. It's a classic one right here, and we can see right there that again is a good level. So right now, target downside would be around 100 for major support. If it ever breaks this trend line, that's where things really get messy. All right, that's where we could start talking about moving down towards the $70, $75 range. But right now, 100 would be the buy level unless it confirms below. Then you exit the trade immediately and wait for that next technical support level to hit. All right, guys, let's do our quick spin of our Wheel of Appreciation. As always, I love doing this here, guys, as we continue to give away prizes each and every day. Just a note here, I think it was on Thursday, because I did Friday's game plan from the studio. The other studio couldn't spin the wheel, but we had the Verified Trade Setup Scanner, which is a scanner on Verified Investing. It's under the AI and Algo tab at the top of the website. It scans for topping tails, bottoming tails, reversal engulfing candles, moving average hits, key levels like that. There's about 8 different factors it scans for, and and it spits out anytime any of these stocks hit, it literally brings it up. Now, it's only on the 10-minute and the 60-minute chart, so it's meant for day traders, but we will be debuting a swing trade version in the not-too-distant future, which we will be excited for as well. And again, it's honestly become my go-to, kind of like my trading buddy, in that when I'm day trading, I have that, and I'm always keeping one eye on it, because when something pops up, I go right to that chart. Potentially, there's a trade there to be made money off of. All right, the winner today, Artemis 3IJW, congratulations. You win a membership to the scanner. So congratulations, 1 month free of the scanner. And again, just email support@verifiedinvesting.com to claim that. All right, let's jump over here, guys. Let's do a quick spin of the wheel, see what we're giving away today. There it is, guys. 1-year membership of NordVPN. Thank you to NordVPN for donating these to the Wheel of Appreciation and giving back to our amazing community of you guys out there. And as always, guys, my goal, and I just want to say this before we just take a quick couple-second break, but the goal of Verified Investing is to give back, not just through things on this wheel, but also things like data and chart analysis that are unbiased, right? There's so many places, and this is what I found, is that, you go on, CNBC, Bloomberg, Fox Business, there's always a narrative being spun by these bigger financial firms, right? You go on to social media like X, and there's always people pumping. Where do you go for non-biased information? And that's really what it comes down to, and that's what I want Verified Investing to be all about. It's probability-based. When I go with probabilities, I win more than I lose, and I make money over the course of the rest of my life. If I go with emotion, if I listen to what they're spewing on TV, I generally make the wrong decision. So that's the idea here of Verified Investing, is to really be that shining star for people that are saying, hey, listen, I'm sick of all the BS, I'm sick of all the hype, I just want to know what the probabilities are. What's the likely outcome with a high percentage chance of a setup here? Are we going higher? Are we going lower? What are the levels? All right, on that note, we're going to take about a 30-second break to just take a look at smart money stocks. Take it away. Hey everybody, welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all, from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term. All right, guys, we are back and right back into Bitcoin's chart. Then we're going to go through gold, silver, as well as oil and natural gas. So what we can see here, guys, is that over the weekend, we had this little bit of a dip in crypto. I actually used it in my crypto service to pick up a couple altcoins that were into technical support. But then the beauty of it is on Monday, we shot right back up and we're hovering right here. Now, if you're looking at price action, it basically is back to where it was most of last week. I mean, literally, except for this little dip and pop, we're back to where we were trading 5 or 6 days ago. Having said that, is Bitcoin in a weak performance statute? We talked about probability just before this, right? So are we looking at a weak probability, meaning downside probability, or upside? And the answer is, as long as we stay below this pivot line, the factors, again, favor downside to support number 1, which is just around that 53,000-ish level. All right, so again, the pivot line remains unbelievably important for me in terms of confirming above it or staying below it. If we, again, stay below it, price action favors downside. If we can get above it, then all of a sudden the metrics change and probability heavily starts to favor a move to the upside of 69,000. Okay, so again, no movement today, but a little whipsaw on Sunday down, and then Monday right back up. And remember, Monday was a holiday here in the U.S., so the volume was in general lighter on the cryptocurrency markets. Let's go to oil here. Now, this is interesting, guys. I told you last week that I shorted oil. I shorted it based on the methodology that I teach that told me, hey, listen, on this bounce right here, this is your shortable opportunity. All right, look at oil today. It is getting crushed. And this is even with more tension starting to develop in the Middle East. And it just shows you, I think, there were more ships attacked in the Middle East that were carrying oil, stuff like that going on. And oil is still cratering. To me, what is this telling me? It's telling me that the U.S., that smart money, The big oil traders know that the U.S. economy is slowing, even though the U.S. investor has not come to that realization, basically because the Fed's not telling us that, right? The Fed's saying, hey, we're going to start to cut a lot, but don't worry, everything will be a soft landing. It's like, well, why do you have to cut so much? Think about it, right? Draw the conclusions, connect the dots. All right, in any case, oil breaking lower here, guys, just to show you the methodology behind why I shorted this trade with my commodity members. Pretty crystal clear. We have this bigger bearish pattern right here on the charts, right? So if we go back here, this was a down move, sideways consolidation, almost a head and shoulders. And then really what we have is we have 1 hit, 2 hits, 3 hits, 4 hits, 5 hits. And then what we know is once you get to 5 hits, probabilities start favoring a downside move pretty heavily. And that's what we're starting to see today. So that breakdown is in play. So nice to see that, as I am in the money pretty nicely on that oil short. Going to gold real quick. Let's punch in gold and see what gold's up to today. Gold is coming in a little bit, although certainly not a whole lot at this point in time. So again, just a little bit of a pullback on gold. One of the things, now gold has been holding up. There's been a lot of new bulls jumping on board. I've been a big proponent in these game plans of saying there's a negative divergence developing on the RSI, so don't be surprised if they want to shake out. That negative divergence probably means they want to shake out the weak hands in gold before it goes higher. And to be honest, I think we're probably headed back down here, maybe even here, but in the very least, this level, just a simple retrace to this level could shake out a few of those, weak-handed bulls. And again, it comes down to that. Markets always want to shake out the most people possible on both sides, right? So they want to shake out the bulls, they want to shake out the bears. Only the strong survive, essentially, the ones that have the high conviction, or basically the ones that haven't over-leveraged, right? Let's be fair. Over-leveraging does create emotional responses that are much, much higher than if you don't over-leverage. Looking at silver real quick, silver continues to come in here. Look at this rollover in silver. Silver looks to me like it wants to come right back here, maybe here. These are my 2 levels to watch. But again, great rollover on silver. And remember, silver is more of an industrial metal, so it's underperforming gold here, which makes sense. If oil's dropping, chances are silver's under a little bit of pressure as well, while gold, it's coming in a little bit, but it's able to hold up better across the board. Lastly, natural gas, guys, as we go into the natural gas chart here. Natural gas kind of is misleading because this was yesterday, so Monday natural gas was open, it went up, and it's just reversing that move today. So it would essentially, if you factor this in, it would be unchanged if you didn't have the commodities, some of the commodities open yesterday. But nonetheless, we're still stuck in this little bit of a wedge pattern. Upside resistance, if you break out, is around the 255 level. Downside support remains around $2. I have no trades on this at all. In fact, we know if you follow these game plans, natural gas has been one of the things I've traded quite a bit with you guys on here and talked about the trades I've been in. But as of now, there's nothing here. There's no high probability setup. You could speculate and say, oh, I think it's going to break out or I think it's going to break down. But I think doesn't constitute probability, right? You actually have to look at the chart. And I have literally no good read on this at this point. So what does that mean? It means I step back and I don't do a thing. All right, on that note, guys, I've got to get to my trading floor. And we have to get back to action here. Great to be back after a long weekend. But again, as always, it's time to make some money. You guys have a great rest of your day. Come check us out at verifiedinvesting.com. And as always, thank you for being supporters here of Verified Investing. Take care, guys.